Hi, my name is Khleif, and today I want to talk to you about keeping your tenants in your properties during a real estate crash. Now, if you don't know who I am, I host the Lifetime Cash Flow Through Real Estate Investing podcast, which I'm blessed to say is the largest commercial real estate podcast in the world, which we've just exceeded 9 million downloads. So how do you keep your residents happy during a crash so they don't move out? Well, that's the operative word. You have to keep them happy, okay? Resident retention is critical in what's coming. Now, I did a YouTube video recently called The Coming Real Estate Crash of 2021. And I'm going to tell you, I believe it's coming, and I also believe it's not something to fear. It's something to prepare for, because forewarned is forearmed. And in a crash, in any crisis, there's going to be opportunity. But that said, what I want to talk about is for those of you that already have some multifamily or even some single family, how you keep your tenants in your properties, because keeping them in your properties is freaking critical. Okay, resident retention is critical. You know, and I'm going to tell you, it's much easier to keep a tenant happy than it is to turn over a unit. There's no greater expense in our business than tenant turnover, and it's going to be much harder to rent empty units than it is to keep tenants in your units when this, the proverbial stuff really hits the fan. So what are some of the things you have to do? Well, first of all, some of these things are going to be obvious, but there are probably some things that aren't obvious. Number one, you got to keep the properties looking good. They've got to be in great shape, and you've got to focus on that customer experience, your tenant resident experience. You want to be almost maniacal in keeping your residents happy through this time so that they stay in your property. You might try to create a sense of community, do community events to get people to feel like they belong to something. You also, very, very important, pay attention to your online Google reviews and your online reputation if you have a larger property. Very, very important. But you got to pay attention to things like work orders. How quick are you responding to your work order fulfillment? How fast are they getting done? And are your residents getting phone calls after that work is done to make sure that they're happy with what happened? One of the people in my mastermind, a brilliant guy named JC, has virtual assistants that call the residents right after they move in, calls them throughout the lease, calls them, asks them if they're happy, if they need anything. Again, it's enhancing that resident experience. You might even consider doing longer leases if you're leasing up now in advance of, the stuff hitting the fan. So you might do longer leases. You might cap your rents for a while and not raise your rents right now. I know we're not raising our rents right now because, and it's much easier to keep a tenant than it is to get a new tenant. Now, you also want to make sure that it's easy for a resident to turn in a maintenance ticket. Ideally they can do it online, or they can text it, or you want to embrace technology and utilize it to keep your residents happy. Also, if you're doing the management, ideally you want to make it easy for them to fill out an application online. If you're using a third-party property management company, make sure they're not a digital dinosaur, because there are some still out there. They need to have embraced technology, and obvious things like if you've got on-site staff, if you've got a larger asset, making sure they've got smiles on their faces when people come in and that they focus on resident happiness. So, you might be thinking, well, I don't believe a crash is coming. Well, you know what? The stuff I'm sharing with you is still good to do anyway, okay? So maybe I'm wrong. I've been wrong before. My kids have loved telling me that I'm wrong all the time. But I got to tell you, I feel pretty strongly about this one. A lot of well-known economists are predicting it's going to happen right around the corner. So, again, this is still good stuff to know anyway. So, but through a crash, it is critical that you pay attention to your pricing. You've got to make sure that you're mystery shopping the competition to see what they're charging. I mean, very, very consistently. Our management companies do it quarterly. I would suggest you do it even more often than that. Go look at what amenities they have. Go look at what they've done as far as, their interior finishes and their packages to make sure you're competing, because you can't afford to lose any time whatsoever if you're competing for a limited number of residents. Because what's going to happen when things get really tough? I mean, unemployment is at an all-time high. Layoffs are happening like crazy right now. I think a lot of it's staying out of the news right now, but it's going to continue. And you're going to see people moving together. You're going to see, probably easier time keeping your 2 and 3 bedrooms occupied than your 1 bedrooms. There'll be people will be cozying up and moving in together. So so as you're doing your analysis and evaluating, other people's properties to see how competitive you are, you may want to consider adjusting your prices right now. If you're not fully occupied, get fully occupied. You can always charge more later, but get fully occupied. And because right now is the time to focus on occupancy. If you're not 100% occupied, focus on that, even if it means adjusting your pricing right now. Because again, I'm going to say this ad nauseum, it's much, much easier to keep a tenant in than it is to turn over a unit. You've got the turnover expenses, and then to try to, find residents in a limited pool of potential applicants. But as you're mystery shopping, see how they compare. Have they lowered their prices? Have they beefed up their properties? Have they done things to make them more appealing? Are they offering concessions? Are they offering rent credits? So, what are they doing to compete with you so that you stay top of market, top of mind? How do your amenities and features measure up with theirs? Very, very important, because they could absolutely capture market share from you if you're not paying attention to this in what's coming, guys. Okay, very important. Right now, also, if you've got deals that you've closed on, I would highly recommend you re-underwrite them to underwrite them to current underwriting, meaning, right now we are even more conservative than we've ever been. And we're buying, don't get me wrong, we're buying right now, even pre-crash, okay? We're buying. We just put an 80 unit under contract literally 2 days ago. But we're super conservative and much more conservative now than we've ever been. So if you've got an asset, re-underwrite it and anticipate some vacancy. Anticipate, how are your operating reserves right now? That's another thing we're going to talk about. Again, you may not want to, you're likely not going to get rent bumps. And if your pro forma shows, your business plan for your asset shows you're going to get rent bumps, you may want to take them out and see what happens. Anticipate drops in your economic occupancy, because you may have to give people, concessions. So there's a physical occupancy, the people are actually living there, and the economic occupancy is the people who are actually paying. And those two numbers are very often different, and especially if you're doing concessions and things to keep residents in your properties. You might also want to stop your CapEx for a while, capital expenditures, your improvements to the property. You may even want to stop your distributions to your investors if you're making distributions to your investors, because again, right now you need to make sure you've got high operating reserves. You want rainy day funds right now. I will tell you, we closed on a couple of assets recently, one in Cincinnati and one in Northeast Atlanta. On the Atlanta one, which is a screamingly beautiful property, we've got $1 million just sitting there just in case, okay? And then on the other asset, which is really kind of a C+, it will be a B asset once we turn it around, we've got $1.5 million there, okay? So again, if you don't know my story, I lost a lot of money in 2008, and I use the adage, hit me once, shame on you, hit me twice, and it's my own damn fault, okay? So you're not gonna hit me twice, so we are super conservative right now, but you definitely need to have higher operating reserves. Another thing that you have to be really religious and diligent and meticulous about right now is your KPIs, your key performance indicators. So what are those? Those are the things that in any business, and multifamily is just a business like anything else, things that you have to measure regularly, that you have to stay on top of. For example, how's your income to budget? What did you project in your budget? How's your income holding up to that? How's your expenses to budget? How are your expenses holding up to that? What's your occupancy like compared to your projected occupancy. And you're going to look at vacancy. You're going to look at people that are putting in notices. You're going to pay attention to your work orders and how aged they are. Okay, if they're days old on a regular basis, you're going to have some pissed off tenants, and you're going to lose occupants. And this is something that we're really paying close attention to right now, because we don't want to lose residents right now. How many are over 24 hours, or how many are several days out? These are the questions you need to be asking your team or your third-party property manager to make sure they're staying on top of this stuff right now. You might even consider doing a survey to directly to your residents to ask them how they're doing, how your property manager is doing, or how they feel about living there, so you get a feel for what's going on. Very, very important. Yes, there is a crash coming. Okay, and there's probably going to be inflation as well. Depending on which political party wins, depends on how much more money is going to go into the economy. But I think we may already be past the point of not having inflation. But again, with crisis comes opportunity. It's not. Yes, it's a little scary, and it's going to suck for a lot of people. And that's sad. And but it is what it is. And so. Do you run and hide in fear? Do you get sucked into fear? Or do you look at ways to maximize your own situation? Ethical opportunism is a phrase I heard from Jay Abraham. Do you look at ways to add value to yourself and other people with integrity? That's what I'm going to be doing, okay? I'm looking at this through rose-colored glasses, and how can I take advantage of, the potential opportunities that are coming? And so, now is a fantastic time to learn this business. And I do boot camps regularly. I do 2-day boot camps. In fact, I'm probably going to make them 3-day, but the next one's October 17th and 18th. And if you're watching this and it's already past those days, just look at the website below, because it'll have the next one on there. But I'm not selling anything at my boot camps. It's just 2 full days of full-on training. I teach you every part of this business, okay? How to find deals, how to build your team, because you're going to find out that multifamily is a team sport. How to pick your market, how to find all the money you need for your deals, because up to this point, finding the deals has been the tough thing. Moving forward, as this economy tanks and there's some real problems, it's going to be finding the money. So how to pre-frame investors and how to find investors and partners. I teach you all of that. How to finance your deals, the different kinds of financing that are available for multifamily, so that you know how to get debt through this crisis. How to do a joint venture or a syndication, and what's the difference between the two. And they're both fantastic. I've done both. How to do the due diligence on a property before you buy it so you don't make a mistake. You think that's important? Even how to manage your property or hire a property management company, and tons more. It's drinking through a fire hose, I'm going to tell you that. But the prices are ridiculously low, okay? So if you're serious about this business, come join me. The link is below, and I look forward to meeting you there, my friend.